Successful trading and investing is all about picking the right market direction at the right time. So in this episode, we're going to be talking about the 5 major cryptocurrency market cycles. In 2017, the price of Bitcoin went up about 2,000% and has recently had a pretty big crash. And that's left a lot of people asking what's going to happen next. And this is nothing new. You know, over the past several years, Bitcoin has gone through about a half a dozen big boom and bust price cycles. And over time, the price of Bitcoin has just kept going up. And if you understand the way that these cycles work, your odds of being profitable are way higher than if you do what 90% of people do, which is let their emotions dictate when they buy and sell. Now, the last video I did talking about Bitcoin's price was around here when Bitcoin was breaking up above 10,000 for the first time. And what I was looking for was a parabolic move, which was going to lead us into the next phase, which was a strong pullback. Let's watch that clip. Right now, however, we have price action that's basically going parabolic, meaning it's just every day green after green after green. And eventually what's going to happen is that's going to become unsustainable, right? Like at some point, the market cycle is going to shift. So what I want to do is actually expand on what I was talking about in the last video where I was talking about Bitcoin's price and really drill down into some of the details and show you what's happened since then. So to expand on the market cycles, we'll actually talk about the 5 major cycles. And if we go back to 2015 and 16, just to review this quickly, in 2015 and 2016, this is what we call the accumulation phase, where price is very cheap. It's off of a lot of people's radar. You know, there's a lot of negative press around Bitcoin and cryptocurrencies. And you'll notice that through 2015 through 2017, we had beautiful market structure, which means there was just a very clear trend in the price of this. So after the accumulation phase, which is the best time to buy for long-term holds, we went into the second phase in 2017, which is the healthy trend, right? So price through 2015 and early 2016 was relatively slow and just, you know, sideways. And then in 2016, we picked up into what we call the healthy trend, and we saw that through about the first 9 months of 2017. And I talk about this in the last video, but basically what was happening is we would put in a channel and then we would break out about 50 to 75%. And each time this was speeding up. And then what happened recently last month was we went into phase number 3, which is an unsustainable parabolic move, right? Again, through here, you can see a healthy trend intact. And then in the span of less than a month, price went up about 150%. Now, when a market makes that type of gain that quickly, it's kind of like a rocket ship taking off or an airplane that's trying to take off at too steep of an elevation, where once it runs out of momentum, most of the time it actually crashes back with just as much counterforce as it had when it was going up. And this tweet that I put out a few weeks ago explains why. I said, everybody knows that you should buy low and sell high, but there's a reason why 90% or more of people do the exact opposite. It's because emotions like FOMO, or fear of missing out, cause people to chase parabolic trends, and then they panic sell during the crashes, right? So when things are looking their most bullish, or when they're going up the fastest, that's when a lot of people like to buy, because it makes sense, right? Prices are going up, then buy. And then when they crash, people sell, right? And CNBC got a lot of flack because they were pumping Ripple at like $3, showing people how to buy at $3 and then telling them to sell at $1, right? So this is just what the mass majority of traders and investors inherently do, because as humans, we're taught to move away from risk. And the media just makes this problem even worse, because when the price of Bitcoin is high, the media loves to pump crypto and put out all these positive articles about it. And then when the price of Bitcoin is low, the media trashes crypto and rinse and repeat, right? That's why these market cycles just go go over and over and over again. So what happens after the third phase, where you have the unsustainable parabolic move, is phase 4, which is the fast pullback. And typically what happens, and again, you can go back and see this on stock charts, on other, fiat currencies, on precious metals. Whenever you have the price of any market, and I know a lot of people like to say, well, crypto's different. It's not. It's a market that's driven by humans, that's driven by buying and selling, supply and demand of people, right? And so it's the same as any other financial market on the planet in that regard. Yes, the technology is different, and I am extremely bullish on cryptocurrencies long term, but this is why for the past 5 years that I've been doing these videos, I talk in market cycles. I don't encourage people to chase the highs. And look, for the record, I'm not a financial advisor. This isn't investment advice. I'm just showing you what I think and what I do. And so after you have an accumulation period that leads to a healthy trend, that leads to an unsustainable parabolic move, and you get the fast crash, the last phase is high volatility, where you typically get several months of range-bound price action that can be great for trading. And like I said in my last video with my 50 lessons, everybody is a genius when prices are going straight up, but it's when they crash and when there's volatility, that's what separates the real traders from the buy and hope investors. So when people ask, are cryptocurrencies in a bubble? My answer is usually yes, and so what? It's okay. Life moves on. That doesn't mean that cryptocurrencies are going to die just because they're in a bubble. If we look at the total value of all cryptocurrencies over the year 2017, you'll notice that we started at about $18 billion and ended the year up around $600 billion. And Bitcoin actually gained over 2,000% in 2017 alone. And so to talk about, cryptos being in a bubble and really why it doesn't matter long term, let's just define what a bubble is. And this is a chart that's been kind of floating around social media recently that compares the Bitcoin price appreciation to all the other big asset bubbles in the world. And a bubble forms when speculation outpaces utility. And what that means is when you have people that are just buying out of speculation, buying because they think the price of something is going to keep going up, like the housing market in the early 2000s or the tech bubble of 2000, right? Crypto is no different than any other financial market. Yes, the technology is different, but when it comes to speculation versus utility, right now we've had a whole lot of people that were buying above $10,000 just because they thought the price was going to keep going up without a correction. So in 2011, Bitcoin was at about 50 cents, went up to about $32, and then crashed down to $2. Then in the spring of 2013, price had not only ramped back up to $35, but it went up to over $250, crashed down to $50. And then this is what I call the China bubble of 2013 and 14, where it ramped back up to $100 in late 2013, made a high of over $1,000, and then over the entire year of 2014 crashed back to $200. And each time we've seen these same 5 phases play out, where you have accumulation, where you have early investors that buy when nobody else wants to buy. You have a healthy trend that is great also for investing and trading, right? You can actively trade and grow your capital through being active in the markets. And then you have the parabolic move where everybody's in agreement that there's a new paradigm and that the price is never going to go down. And then the mass majority of the market gets surprised by the fast crash. And what happens after that is you have a period of high volatility and then rinse and repeat. Then you go back into accumulation. So the way that I play this is when prices are cheap and it's in the accumulation phase, I think that's a great time to accumulate for the longer term. When prices are expensive, that's a better time to be an active trader where you can trade breakouts and you can set your risk and predefine your reward and be more disciplined with it, because when the price of a market is high relative to where it was, there's more downside risk. And so if you ever look at a market and you say, is this a good time to buy? Just look back in recent history and see where price is relative to where it was over the past several months or year or so. So looking forward at this price action, I think what we're going to see over the next several months is some nice dip buy opportunities, but also some range bound action where I think we're going to see some good short trades, some good long swing trades, some good day trades, and I will continue to do that until we go back into an accumulation phase where we rinse and repeat. So I hope this video is helpful. I'm actually going to be doing a live market class next week where we're going to dive into more details about market cycles and which trade setups go specifically with the different market cycles, and also talk about risk management, because I know recently there have been a lot of new people that have come into the crypto space that really don't understand money and risk management, and that's really the most important piece of trading and investing, no matter if it's in crypto or real estate or in startups. And so I'll link that up below, but if you have a question or a comment, feel free to leave it. If you know somebody that could get value from this video, feel free to share it with them. Thank you guys for watching, and I will see you next time. Take care.